should we buy or sell silver? So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So gold and silver is in the money sheet. Here is silver. Last time I reviewed it was on the 15th of May 2022, the most important indicator now. And we can see that we are at, with 36% away from the 52-week lows, but still 11.6% away from the highs. So let's jump into the charts. Here is the chart, weekly data points, and we have seen a pretty substantial rally here from the lows for silver. So from these lows back here, we have seen, 36%. Very strong, and these are big numbers for this precious metal. Looking at the daily data points, you do see that there is some exhaustion here for, especially if you look here at the weeklies, you see that the bulls, they are moving higher, but some of these higher levels of the candlesticks are abandoned. So there's something here that could mean that a pullback is on the horizon. But let's explore further. Looking at the weekly RSI, we are high. The previous time we were around this territory was back here, and that certainly led to a pullback. So looking far back here, quite a few times where we have tested these RSI levels on the weeklies, we have seen pullbacks not that much later. Also vis-a-vis the purple 20-week PPO, also very, very high. When we go to the daily data points, we recently were rejected from this upper region of the RSI. So there's a tendency historically that when we test upper region of RSI, eventually we will explore the lower region, even getting a bit oversold. There's a very clear dynamic here in the RSI indicator. It's just the way this security behaves. Looking at MACD, we are also very high. We haven't been this high since back here in, well, we haven't been able to thrive on higher levels since 2020. So there are some initial signs here of a risk, specifically a risk for the bulls. So I would say that we are overbought. I will give the bears here a -3. So nothing dramatic. We are definitively in risky territory, but the bulls could push higher. There is a context now that is favorable to silver, but we have already seen a pretty substantial gain. So there's a bit of a risk that the more sophisticated money is going to start unloading their positions. Okay, so here is the seasonality for silver, and the 10 years are in red. In green, you see the last 5 years, and blue, the last 7 years. The seasonality is rather bearish into late January, which fits the idea that we could get a bit of a pullback. You see here that, January closes higher 60% of the time, February closes higher 80% of the time. So if we were to get, the expected pullback here in January, then there could be a very nice entry opportunity in late January for silver bulls. So I give -5 here to the bears on the seasonality. On the fundamentals, I will give -2. I do have a separate tool that I use for fundamental analysis of commodities, but I can't share the screen when I do it. I think that's not according to the license. Let's look at relative performance. Looking long term, there is a 56% correlation between silver and the S&P 500. There is a 74% correlation with gold and 80% with the silver miners ETF SIL. The silver miners is a way to get more turbo exposure to silver. Looking short term, daily data points, we have 15% correlation with S&P 500, 72% with gold, and 87% with the silver miners. The strongest correlation we get long and short term is with the silver miners, but obviously the silver miners are sort of under the category of silver, so it's more interesting to have a bit of a look at what's happening with gold, because that is the thing that could have a significant impact on a silver position. Okay, so here is gold also seeing a very substantial rally here from the lows. The problem for gold as well is that it has seen a strong rally, but we are now in a very nasty territory. This is a cluster of resistance levels, also support levels, but it's very messy. We have had now, so how long have we had? We have had, yeah, 64 days of a pretty consistent rally, but historically speaking, gold usually isn't that clean. After clean periods, very jagged trading usually ensues. That's what the chart is telling us. So there is a risk now that when we are in this territory with the resistance levels and messy support levels, that there could be more erratic price action. Looking here at the daily data points, all in all, it still is looking pretty healthy. But there is some initial signs here in the wicks that some past and old battles between bulls and bears have reawakened. You see here the candlesticks are very clean. Now there's more wicks, and when wicks get longer, usually a sign that there's a bit of a battle ongoing. And then you have to ask yourself the question, do you want to be in the middle of the battle or not? Looking at RSI on the weeklies, we are fairly high, but not extreme risk high. But we are high. We are elevated for sure. Looking at the daily data points, we recently were rejected from, high RSI-ish level, but not extreme high RSI. But basically, the easy gains have most likely been made by the bulls. Looking at the seasonality here, it usually is weak into later January. Now let's do a bit of a comparison between silver and gold. So the silver and gold ratio has been a big topic. So let's look here. So silver has outperformed gold as of late. Still fairly low in this relationship. So you could argue that silver is still undervalued versus gold. The tricky thing for silver is that it's not a pure precious metal. It's used in a lot of industrial applications. So silver is a bit messy. And as far as storing physical precious metals, for bad times, I would certainly recommend gold over silver, because silver is just, there's not like a bunch of silver in Fort Knox and other elite places. They have gold and diamonds. As such, it's pretty clear that gold is really the true precious metal. People like to hoard silver because they can get a lot more and they can have nice stacks of silver. Of course, stacks of gold would be very expensive, but that's also the big benefit with gold. It's very easy to have huge value in a very small confined place, and that's not that heavy. So if there were to be some dramatic situation, you could easily carry extreme value in gold. Same thing in silver would be more laborious, I guess. Okay, looking okay, seeing some risky signals here from RSI in this silver gold pair. Seasonality is pretty bad here, meaning that Silver has a strong tendency to underperform gold into late January. There's that. Yeah, very 55-ish percent here, 50-50-ish for silver in this pair usually. So I will give the bears -3 on relative performance. We end up with -3.3 here in favor of the bears. The key issue now for the bulls is that we are overbought. Further, we have reached a territory where there's a lot of history, can get messy. Of course, if we do get a very strong catalyst, then it will be able to smash through it. That's of course very possible, but there are these signals now in the data that if we were to see a bit of a pullback after a strong bullish bull run for silver, it could actually be now. So we do have some time left. Let's look at some interesting charts out there. So it is a new year, so let's look at the last year. So performance over the last year. So in tech here, a lot of red numbers. Microsoft is down, 30% over the year. In retail trade, Amazon down very big. Energy and minerals up a lot. Healthcare services, some of them have some pretty green numbers. Electronic technology. So the thing is that there's a bit of a phenomenon in the market is that some of the laggards can very quickly become the new winners, and some of the winners can become laggards simply because the past winners can get very overvalued while the laggards are undervalued. So if you have something like an Apple or Amazon, and you compare it against ExxonMobil, so let's have a bit of a look. So let's look at Amazon. It's down a lot. There is the potentiality that this one could be undervalued, while ExxonMobil historically relatively high. So there's that. Let's look quickly here at the seasonality. Actually, a bit bullish for ExxonMobil. For Amazon, yeah, might be a bit more weakness, but then some strength. Yeah, let's have a bit of a look. We have looked at Tesla. Well, this is published on YouTube, so let's have a bit of a look at Google. Like that. Alphabet shares. We are testing a very key horizontal support level now, right here. Key support, but also a potential fail level. But I would give the bulls the benefit of the doubt on the technicals because the floor has not been broken yet. And when you look here at the last wicks, the wicks here are higher than this wick. So there is some initial sign of that there are bulls. Looking at the seasonality, January usually is a bit mediocre into mid-ish January, but then it gets stronger for Google. Price book is pretty low, also price sales and price earnings. So Google is certainly very much undervalued. So 42 analysts have a 1-year price forecast. Everyone is bullish. Even the minimum price target is 4.8% above us. So that's a very strong sign that Alphabet is undervalued. Let's have a bit of a look here at let's take the Euro stock index. And we take, the last year. Sort of like the same logic applies here. Let's have a bit of a look here actually at the crypto market on the heat map. And we do the same thing. Look at the performance over the last year. Bitcoin down 64%, Ethereum down 67%. So a lot of red. Actually, some green numbers here, and also here from TON/USD. So yeah, I think that this could become an interesting year for Bitcoin. More specifically, Bitcoin bulls, because the bears, they definitively had a very good 2022. But at these very low levels, it's becoming rather dangerous to be a roaring bear. So I do think that the rally in the cryptos is pretty high probability. The big question is how the market will respond to the very predictable pullback after that rally. If that pullback is followed by a deeper crash, obviously very, very, very bad. So the reaction to the pullback is really the one to have on our radar, but I do think that is further into the future. First, we need to get that rally.